The envelopes indicator is a technical analysis tool that overlays two bands on a price chart, set a fixed percentage above and below a central moving average. It helps traders identify potential overbought and oversold conditions, determine trend direction, and spot potential support and resistance levels. How the envelopes indicator works. The envelopes indicator is based on the principle that prices tend to return to their average value after deviating significantly. It consists of the following components. Central moving average, MA. This can be either a simple moving average, SMA, or an exponential moving average, EMA, and forms the center line of the indicator. Upper band, calculated by adding a set percentage deviation to the moving average. Lower band, calculated by subtracting the same percentage deviation from the moving average. The width of the channel is determined by the percentage deviation. A smaller percentage creates tighter bands that generate more frequent signals, while a larger percentage creates wider bands that produce fewer but potentially more reliable signals. How to trade with the envelopes indicator. You can use the envelopes indicator for both trend following and mean reversion strategies depending on market conditions. Mean reversion strategy in ranging markets. In a market that is not trending strongly, prices tend to fluctuate between the upper and lower bands. Buy signal. When the price touches or drops below the lower band, it indicates that the asset may be oversold. A buy signal is generated when the price reverses and begins moving upward from this level. Sell signal. When the price touches or exceeds the upper band, it suggests the asset may be overbought. A sell signal is generated when the price reverses and begins moving downward. Trend following strategy in trending markets. In a strong uptrend, prices will consistently trade above the moving average. In a strong downtrend, prices will trade below it. Uptrend entries. Wait for the price to pull back to the lower envelope or the central moving average for a buying opportunity. In this context, the lower band can act as a dynamic support level. Downtrend entries. In a downtrend, a pullback to the upper envelope or the moving average presents a selling or shorting opportunity. The upper band acts as dynamic resistance. Breakout signals. A sustained move that breaks and closes outside an envelope can signal a continuation of the trend in that direction. Limitations of the indicator. Lagging nature. Because it is based on a moving average, the envelopes indicator is a lagging indicator. It reflects past price action and may produce delayed or false signals in fast-moving markets. Not adaptive to volatility, unlike Bollinger Bands, which use standard deviation to adapt to changing volatility, the envelopes indicator uses a fixed percentage. This means you must manually adjust the percentage setting to fit different market conditions. Requires confirmation. For more reliable signals, many traders combine envelopes with other indicators, such as the Relative Strength Index, RSI, or MACD, to confirm overbought oversold levels and momentum. How to configure the indicator. The two main parameters to adjust are the moving average period and the percentage deviation. Moving average period. Shorter periods, example, 10 or 20 create more responsive bands, suitable for short-term trading like day trading or scalping. Longer periods, example, 50 or 100 create smoother bands that are better for filtering short-term noise and identifying longer-term trends for swing trading. Percentage deviation. Smaller deviation, example, 0.5-2% for less volatile assets or calmer market periods. Larger deviation, example, 2-5% for more volatile assets like cryptocurrencies or during volatile market conditions.